All right, welcome everybody to webinar bajillion, whatever that number is. Gary is currently giving a presentation on his book, How to Silence the Imposter. So hopefully he's having fun. I do have a few choice words to say that he prioritized that over hanging out with all of us. But anyway, so you're stuck with me and Jack and a special guest. I think we're going to start copying my family likes to listen to Smartless, so we're gonna start copying like the guest reveal. Guess who it is, Jack? Like you'll never guess based on that. Anyway, we're not gonna do that. But anyway, I thought that was a funny reference. So Jack and his guest Rhett are gonna be the talent for this week. So I'm gonna shut up and listen here in a minute, and I've only got one slight opening political rant, Jack, before I turn it over to you, if you would allow me to indulge myself before I get into too much trouble with Gary for going on a political rant. But since he's not here, it's allowable.
That's what I
Now,
was gonna say. He'll watch the video and he can't do anything about it, so you're good.
yeah, and then I'll hear about it tomorrow. Or actually tonight. He'll send me a Teams chat tonight. Yeah, I listened to the webinar. Way to go, idiot. Um, so it actually isn't, I promise there's going to be a business weave into this in a minute. So I saw the press conference with Elon Musk and President Trump the other day, and besides the fun fact that if you watched it carefully, Elon Musk's child on national television picked his nose and ate his booger. Like that really actually happened, which was hysterical, and I guarantee will be shown at this kid's wedding, at some point in the future. But yeah, that really
Oh, that's
happened, Jack.
horrible because my wife actually said, "Oh, look at the cute boy," and now that just totally blows that out of
Well,
my.
yeah, so that shows what your wife was looking at versus I was looking for any moment of failure. Oh, the kid picked his nose and ate his booger. How about that? But anyway, it made me, as I was just thinking about, the commentary afterward was like, well, they're finding this waste, they're reducing the headcount, in terms of government bureaucracies. I've actually had some people at the IRS reach out to me on LinkedIn saying, hey, I might need to get back into industry. I don't know what's going on over here. And it just made me think about a couple things, that I think are relevant as a business owner. The first is just as a macro level, while this can all sound pretty scary, um, I do know a lot of people that are in government that say, I would never have done this if I was designing this from scratch. So that's just a statement of like, hey, that's interesting information. That hey, we're doing some stuff around here just because we've always done it this way or because somebody said it a long time ago. So kind of in it, kind of if I look at that in my own business, what processes do I have at BGW that I'm just doing because somebody's been doing them? Versus if I had the opportunity to do them all over again, I would not do them this way. That's kind of fun fact number one. Just to think about, hey, is Doge all bad or not as a committee? I think the second thing that's a good takeaway is I'm like, well, is Doge good or bad? Are these headcount reductions good or bad? I don't really know. Um, but in other words, like if you go back to OSHA and getting rid of people at OSHA, there's probably a body of things that OSHA does that actually doesn't make buildings safer that could be eliminated tomorrow, to then be replaced by 10% of things that actually would make buildings safer, but they don't focus on those things currently because they're too focused on other stuff that doesn't make buildings safer. So I'm generally okay with that. But then I thought, well, if I was attacking this problem, what would be the first thing that I would do? I would look at, well, what's the head count of government employees per US population? Because if that's been increasing, in other words, like if one government employee is servicing 1,000 people, but in the past it was 10,000 people, then clearly we have a problem. And let's focus on like, why is that the case? And the answer to that question is the number of government employees has actually been going down per US population, not up. So that's a good positive fact. The downside to that, though, again, this is where it applies back to business, is that the percentage like that ratio, the ratio is about 1 to 1,000, right now. The the problem is that ratio has been relatively constant for years. So on the one hand, you could pat yourself on the back and say, way to go us. We're keeping the ratio constant. On the other hand, if I look at my own business, because that's what a lot of people, boss man, we had 10 people doing this many client work, we need, we lost one, we need one more, to replace them, right? That's a common thing. Like it takes 10 bodies to do this work. Therefore everything should be proportional. That completely ignores any technological advance, that could possibly exist. So in other words, like if my budget is based on what's the percentage, that it takes, it basically means that, you know, I'm not getting any technological efficiencies that have occurred. Instead, I'm just saying, well, let me find more stuff for the people to do to justify their job. And if I look at the accounting industry as a thing, you know, that's actually been a source of my own frustration. So all clients that are on the call, thus begins the beginning of my rant on why I have not been able to decrease your fee. If I take one example, which is I get these massive technological innovations. And then I get a rule called ASC 842, which is the right of use lease accounting standard that came out that absolutely is worthless, provides no value to any privately held company financial statements, but I'm supposed to do it. That one stupid accounting rule that somebody created because they thought that it would make some banker's life better as a user of financial statement to properly account for operating leases, you know, like my rent. Now I guess, Jack, I own my building temporarily for the lifetime of the rent and have a corresponding liability for the rent payments. Like it's ridiculous. Just I don't actually have a rent expense anymore, per gap. Well, the software alone to keep track of that is $80,000. Like they have their market cornered, you know. Like they don't charge for like user license like the normal folk do. They charge by number of leases. So it's like they have a captive audience. To put that in context, it's actually more expensive than my tax software. My lease accounting software is more expensive than my tax software. It also added overall about 10% increase in hours to do. So I had to give the people raises. Plus, I now have 10% more work to do that absolutely adds no value because some regulator said this will provide more financial transparency. So that's another way of saying, like, as a business owner, are there areas where I'm allowing the inmates to run the asylum? Because I'm not asking enough questions around, well, you need another person. I actually wanted you to do it with 5 people less. you know, So I may not be super happy about some of the messaging, and stuff like that. And, maybe there's some over exaggerations on what they're actually finding. But the concept of let's reduce stupid stuff seems pretty good. And my takeaway from that is that if I take that as a practical application of how can I reduce stuff at stupid stuff at BGW and our clients, that's a good thing. Like we should be doing that, versus accepting the status quo. So with that in mind, that wasn't that bad of a rant complete. Other than, from a tax perspective, you know, the big talk is, do we do immigration reform and then a tax bill versus immigration reform, tax bill, and rainbows and unicorns all at once? I don't freaking know. But they need to do something about both soon. So anyway, I'll shut up now, Jack. On to you.
No, all good. I'll give you another example about kind of wasteful or not looking back into your business and doing same as it was. And the example is all of the books that we had or still have in some cases that are subscriptions to the North Carolina Code, South Carolina Code, IRS Code, all these things that for when I was younger were in paper form. you might be able to access it via Westlaw and LexisNexis, but that was expensive. And so we all had subscriptions, and we would get the paper versions of them in all of our offices. And then it was okay, with the advent of technology, paying subscription based for either on a use basis or just having a subscription to have it available. And but there was pushback as to, well, why, let's say the older people, older than me, were like, well, we need to be able to go down the hall into the law library of our office and look through things to make sure, and then we have to go to another piece of paper to update that, and on and on. And the solution was, well, how about we teach you how to use it electronically? And but this was before you could look up, NC general statute, whatever, and it popped right up in Google search. So it's even easier now. But same thing, which is okay. But then they're different costs. And maybe that's subscriptions. You need more subscriptions because they have pulled them apart and said, okay, well, if you want corporate statutes, you got to pay over here. If you want litigation, you have to pay over here. That's an exaggeration and not a real life example because it's all put together. But so things like that. So yeah, I'm with you as far as looking back at your expenses and not just assuming, especially at this time of year, beginning of the subsequent calendar fiscal year for each of your businesses, to look at what you're spending money on, and is there a more efficient, less expensive solution to getting you to where you need to be with whatever it is. So
Yeah.
and since we're talking about technology, I'm going to go off on a small tangent, which is a discussion that came up yesterday in our internal corporate department meeting lunch, but is something that's been on my mind and other people's minds, and I see that someone has added Otter AI to this call to take notes, which is fine because, as I've said periodically, this is not legal advice, it's not tax advice, it is guidance, and very general guidance at 30,000-foot level, and not for any specific purpose or situation or matter. So having said that, again, you need to be careful with assuming what is going on with what is being recorded. So, and especially for a law firm, we have attorney-client privilege communications. And if those are being recorded by AI, is that more of, in the comparison was made to a transcription versus it being a recording, analysis, and then production of whatever it is, a summary or actual everything else. But is it going somewhere in the netherworld of electronic commerce and the internet and the web and everything else, and then coming back to you? Is the information being aggregated even anonymously by ChatGPT in its learning function of what it does in order to become better? So all these things to consider. My point is that, don't assume that anything that you use AI for is totally confidential. And do not be surprised if your attorney or CPA says, yeah, we need to turn that off because we're not going to use that. And again, whoever's using it in this instance, we're fine with that because we record it and we put it on the web anyway ourselves. So, but just be aware of that. An interesting, and then also a more practical warning came from a new associate of ours. She is from Brazil, and she was telling us a story about how AI was recording a conversation. And then because the person who there was, I'm making up these numbers, 10 people on the invite list, 9 people actually show up. The 10th person is not able to show up, but AI was used and it distributed the discussion, the memorialization of the discussion, to all 10, including the one person that wasn't there. And you might be shocked to think that, well, they didn't think he was in the room, so they talked not so well about him. And he had a transcript of all the shit talk that they apparently were, in live conversation behind his back. Well, not behind his back anymore, because he has it in writing right here, and apparently caused a huge rift in that organization. That person left that organization, and I don't know if the end, we didn't finish the story, whether there was, a defamation lawsuit or whatever, but so just be aware of that. So that's tangent. kind of out of the way, I have a second tangent, and I wanted to share this last week, but it was called the Playbook for 2025, and it was out of the Charlotte Business Journal, published the week of January 10th. And I'm just going to read through this and just some food for thought as to what is on people's minds, apparently, because they did a poll, and it's like the top 10 things to watch in 2025. So, and happy to discuss this in further detail. So if one of you writes back and says, hey, that sounds interesting, maybe we want to expand upon that in a future session of this webinar, that's fine as well. So one, I'll just go the top through the 10. Shifting pay, the shifting pay picture, meaning, what companies are doing as far as when we talked about retention and motivation and money versus non-monetary compensation and what's important to others. Remote work last stand. We continue to see a mixed bag of bosses and companies that are saying, come back to work. You have to come back to work or you're going to lose your job, versus those that are maybe a little more flexible and what is the right way to go in comparison to efficiencies of having people in the office, the inefficiencies of having someone have to drive an hour in each direction, those kind of things. The balancing act on benefits. So again, what we talked about, incentives and things like that. The future of DEI. There's been a lot of discussion about that and about cutting of programs on the federal and state levels and things like that. Will loans start flowing? So that's related to, and there's another entry here about commercial real estate and interest rates generally is on the list. The office leasing equation. A lot of office space is still unoccupied. I sometimes walk down the 22 flights of stairs, and sometimes the doors are open, and I'm very curious, and I look in, and a lot of empty space, open shells. So in our building, and I'm sure that's the way it is. Although rumor has it that there's the uptown is being filled, but even more so if you've driven down Tryon or South End, South Boulevard, and then now lower South End as you're going south. I mean, there are cranes everywhere. And so a lot of businesses are moving out of the center, the uptown, into those areas. The looming workforce cliff. So talking about the aging generation, and then a little jab at younger generations that maybe are not, the work ethic is a little different. We've talked about that, but I'm not going to throw any jabs into that today. The changes in Washington, obviously, and then we've talked about AI's explosive growth a little bit. So those apparently are the top 10 list as published by Charlotte Business Journal a few weeks ago. So now on to the main event. So let me introduce Rhett Butler. Yes, that is his first name. He's already had several jokes about that this morning, apparently, including from Adam before we started the live presentation. So we have some bets on the over under as far as how many times that will happen for the rest of the day. But he is part of our corporate group. He has his LLM, so he's our tax guy. I know that some of you have worked with Warren Keene in our office as clients. And so Rhett is the heir apparent to that dynasty, and and firm wide. So really happy. I mean, all of you know how important the link between CPA world and and the legal world with respect not just to taxes, but just tax planning and tax consequences and those kind of things. So the crossover between those two worlds is where Rhett resides, in addition to general corporate practice and knowing other things, like being a pilot. You have your pilot's license, right? Did I remember that correctly? Yeah, I mean, so all kinds of cool things, and someday you're going to tell me you really work for the CIA or the FBI or something right down the road. So I'm joking. Maybe I'll let you know if I find that out for real. But what I want to do is go through some topics in the time that we have, and just as always, a conversation. If you guys have questions about anything or want to expand on things, and so I'm going to start with a very general concept. So it was phrased in a very nice way as to, if you want to paraphrase kind of what the topic today is top 10 things not to screw up in your business, and reminders of those. But it's, the top things, or the most common things that business owners fail to do that might make their businesses better or more efficient, is the PC way of saying what we're going to talk about. So the first thing that comes to mind when I think about that is, um, what is your entity structure like? So do you have an LLC? Do you have a C corporation, S corporation? Have you thought about the governance documents? I mean, we've talked about all these things. So I'm really kind of just recapping that now is a good time to go through your documentation and see if what is in there is relevant. If let's say perhaps you've brought on a shareholder or a member, and that person was single at the time, maybe got married, you might want to consider putting into, or maybe everyone was single at the time you formed the LLC. So maybe you think about, okay, well, we want to keep it within the original group. So how do we do that? Do we need to modify the operating agreement or the shareholders agreement to create buy-sell rights? Do we need to modify it so that there's rights of first refusal, where there might not have been that earlier on? I've told many war stories about, and the one I tell, I think, the most to people is a true story. Back in 1991, four guys graduating from college started a business. The business has done really well over the decades, but one of the four fraternity brothers wasn't pulling his weight. And so, they came to me and said, what do we do about this? And I looked through the documents. I said, well, you either have to tolerate him or kick him out. And you really can't kick him out. You have to buy him out. And this is apparently the formula that you guys came up with in 1991 in order to make that happen. And they said, we don't want to pay him that. And said, okay, I understand that, because that's a lot of money, but that's what you guys agreed to. Well, we've paid him, bonuses, and, paid for his family to go out to Vegas to the trade shows and all these things. And he's been treated very well. And so we think that he's already gotten some of what the value that he's entitled to. And I said, well, that's not papered up. And so those are the things you think about. Sometimes, and I would suspect that most of you on this program are not operating as sole proprietors. So that's really not an issue. But, if you were operating as a sole proprietor, and even had an operating agreement, it was probably written in sole proprietor language, meaning one owner, one member, and you've brought on others. Now you need to think about, okay, does the document have appropriate language in it for two people? And is it a partnership, or is it a C Corp, or is it an S Corp? And so I want to get into kind of the next topic, which is, it's not choice of entity, because I would say that there's a lot of gravitational pull towards the LLC format, and we've discussed the reasons why for that. But there is also the tax election aspects of forming a business, and it's appropriate to talk about it because, unless I'm mistaken, Rhett, that it's 75 days from the beginning of the next year, which means March 15th. So there's still time if people want to, or have thought about, okay, maybe it's time to do that S Corp election, for the reasons that you may be sharing with them in a moment as to why people do that, there's still a little bit of time. So maybe talk about the typical uses of a C corporation, why you might want to do an S Corp election, or why you generally would remain as a partnership. It's a very loaded question, and I know you could talk, all day about that.
Days.
There's a lot to talk
Absolutely.
about, but just, maybe the highlights of that.
Yeah, absolutely. And I really appreciate you having me on the show. And thank you for the warm introductions, both Jack and Adam. And as Jack said, with kind of your designation between an LLC and a corporation, they're the state level entity selections which you're choosing from. As Jack mentioned, we're always kind of pushing towards LLC, at least here in North Carolina. Each state has a different limited liability company act, and if they don't, they will certainly soon. And that's one election, and then there's a second election, which I think a lot of business owners, Jack, end up conflating with the entity type selection where, okay, I can form an LLC, but the LLC I can choose to tax as an S corp or choose to tax as a C corp, and vice versa with a corporation. So it's very important to make sure that you understand that designation, because we certainly believe that in North Carolina that forming as a limited liability company allows for much greater flexibility in contractual rights between the members of the LLC. And once you're there, of course, an LLC, or if it's an LLC taxed as a single member entity, or as a partnership, if there's more than one member, then there's going to have its own subsection of tax implications for those members. As many of you probably know, a single level of tax, just like an S corporation, but also you fall subject to some of the self-employment taxes and other various state level taxes that you'll have to end up paying, which is why quite a few people end up going for an S corp tax election early on, because they can end up parsing out and realizing that they would actually save or make more money each year due to the fact that they don't have to pay that tax bill, as they would as a single member LLC or as a partnership LLC. And then, of course, you move on to an S corp and a C corp, whereas, like I said, the C corp has a second layer of tax once at the corporate level, and then again when shareholders receive that type of payment out, whether it be a dividend or a payment for wages from the corporation. So it's certainly something to think about when starting a business, or as we have with many clients, reorganizing as a different business, because they realize, like you said, Jack, they've signed this old operating agreement back in 91, and it's not necessarily the terms that everybody kind of had in their mind, the back of their mind moving forward, because now the business is highly successful. And so, we have plenty of clients that come to us with both an S corp, a C corp, and a LLC, and they realize that there could be tax benefits or divestiture benefits down the road when they choose to sell their company to switch their entity type. And that's definitely a very in-depth conversation we always have with a lot of our clients here at Shoemaker, is understanding the ramifications and the unfortunate tax externalities around restructuring.
And that's a great lead into the next topic of discussion. And Joe, I see that you have a question about employees and independent contractors. That's definitely on the list, but and I'll get to that in a moment. But I want to continue on with the structuring of an enterprise, and part of the reason is it's come up at least twice, maybe 3 times just this week. And Rhett knows this discussion because I've asked him to get involved in at least 2 of these. But it is as an enterprise grows and you have single purpose or sole purpose entities that maybe it was the entity, the LLC, that was set up to run the business, and then you run a separate location and you have a separate LLC, and then in one case that Rhett and I were discussing, you have a third location. This is a multi-unit franchisee that opens up a third location with a separate LLC, and now the discussion is, okay, do I run them as separate LLCs? Do I create a holding company and then have them as single members that roll up to the holding company? And, because I've been told that's what I need to do. I need to, have one thing up here that is over everything. And I've been told that for a number of reasons. One is that if I want to sell off this unit, it's easier to do that. Another is that I can, control what taxes I pay, because it is, even though it's a pass through, there may be expenses that the holding company has, or maybe the holding company is providing management services down to so there's all kinds of reasons, but that we could get into that are more complex, but maybe just a fundamental understanding of why you might consider doing the holding company structure versus leaving it as independently or independent LLCs owned by husband and wife, partner one, partner two, whatever it may be.
Yeah, so it's certainly an interesting question. And when it comes down to it, I think that most of my guidance nowadays with the Limited Liability Company Act and corporations and liabilities to shareholders or members and preventing potential suitors from suing and piercing the corporate veils, we like to reference it in the legal world, and grabbing for personal assets. There's a lot of protections with both entity types. And really what I usually see with trying to think about restructuring in that instance, if we take this example of the multi-level franchisor, is that it gives you the potential to plan for divestiture. I think that in the business world, a lot of business owners may have heard of, small business corporations and the tax benefits that go along with that. It's, granted, every circumstance is a little bit individual in itself, but a $5 million in gain exclusion from tax and or 10 times the adjusted basis, which is, as we know, is just kind of a fancy word for how much money has been invested into the business or how many assets do you hold. But for example, in Jack's situation with the franchisor, they've held these single purpose entities for quite some time. They continue to grow, and that's great because it allows for each entity to be separate individual from the others. But it gives you a great planning tactic when you say, okay, well, maybe we form a S corporation holding company and contribute these single purpose entities to the S corporation to think about the future of selling these entities all together and allowing for that kind of tax-free gain at the end of the rainbow. It certainly is one piece that I always recommend to my clients to think about. I think a lot of times, one of my favorite quotes is people underestimate or overestimate what they can do with 1 year and underestimate what they can do with 10. And a lot of people don't like to think about 10 years from now. What am I going to be doing? Do I want to work here for the rest of my life, or do I want to divest and sell and go retire in Tahiti or wherever it may be?
And if you would share kind of the opposite of that, which is another scenario that we have, and we have a client who told us what they wanted to do, and they, we're special counsel to them, and it was their in-house counsel, supposedly, along with their CPA, that said, well, we want to basically take a North Carolina C Corp, I think if I remember correct, North Carolina C Corp, turn it into a Delaware LLC, and go from there. And, alarm bells started in my, kind of an involuntary reflex based upon, what I've been told is a no-no. And Adam's probably, I think I may have gotten his attention as soon as I said that, but if you could explain what happens if you do it incorrectly, like that proposed scenario that we prevented.
Yeah, it's so particular, and Adam can probably touch on it as well as, the tax implications of blowing up what I like to consider blowing up a C corporation is, effectively the IRS determines it as a complete liquidation of the corporation. And depending on, the assets in the business, the basis at the time, of course, there's some math involved, but there may be a very unfavorable taxable event which most clients don't think of. They say, oh, I've got this business. Let's just, flip it around and run it the other way. There's some tax benefits go that way. And, if it's done incorrectly, it certainly can hit hard and heavy when it comes tax season for the following year.
Yeah, that's you hit on an area that I like to call, oh, sorry. Was that a mute? No, okay.
No,
You can
we
hear me,
can
right,
hear
Jack? Okay, yeah, here I wasn't showing up in the screen. So yeah, that's an area of the tax code where, um going back to the opening rant about stupid stuff that if you had to do it again, you wouldn't do it that way. You know, that definitely is one of those big areas around the deemed liquidation when it's me. Like I didn't sell the company myself. I'm still me. You know, like that doesn't like someone explained to me what nefarious thing that I was trying to accomplish in all of this that would otherwise cause me to have to pay taxes on the assets that I supposedly sold to myself that I already freaking own. You know, so yeah, you hit on a good one, Rhett, and you know there are ways around it, but it you know you that's a good one.
Has to be done correctly. That's the
Yeah.
most important piece, and I think it draws a very interesting distinction. Not to get back on our opening scene tangent between Adam's comments about efficiency in the government and Jack's comments with AI. You know, here I think there's a distinction to draw where the government has been you know inundated with their 1960s style paper in an old deposit mine and saving retirement papers for 70 years versus the current generation where corporations and businesses and our businesses have been trying to improve and create efficiencies for our client, and then artificial intelligence comes in, and it's a great tool if you still have the overall understanding. It's just like what we're discussing here with corporate restructuring or tax implications. Is you won't believe how many clients I have that have said, oh, well, Chat GPT said I could just do this and I can just restructure my corporation to an LLC. And it doesn't even bring up the idea of these negative tax benefits or tax effects. And so it definitely is something that we want to, keep on our radar for everyone.
So I want to transition to the question that Joe has asked, which is improper classification of employees versus independent contractors for compensation and overtime, and talk generally about it. It says potential liability, so basically consequences, rather than okay, what is an independent contractor and what is an employee necessarily, because that's a topic for another day. But here's the recurring story, and for a while it happened a lot in the construction industry, in other industries, service industries, where it is okay, you have a company that has a job to do and they need people, and what they need people to do is pretty consistent and linear and repetitive. And so I heard that I should take all of my employees and turn them into independent contractors, because then I do not have to pay payroll tax. I do not have, they're not gonna, be part of my unemployment regime. And basically I just pay them and they have to pay for their own, they pay their own taxes. They're responsible for figuring that out and filing it. I don't have to withhold my 6.67 whatever percentage it is as employer, and I am no longer a trustee of the federal government when I collect payroll tax. And I've said before, and I don't know if the Charlotte Business Journal publishes this anymore, but when you look, you can tell who has not been paying, who's been collecting and not paying their payroll tax in the back end of the Business Journal. I don't know if they publish that anymore. If you know the code for the payroll tax provision in the IRS code, then you can figure that out. So, but here's the problem, is that if you misclassify, and Joe, this is to answer your question, you misclassify them and the IRS comes back and says, you know what, these are really your employees and they have been your employees for the past 3-4 years, and you've been classifying them as independent contractors. You've been paying them all of the money that they earned and not withholding that payroll tax. And you may be surprised to find out that the people that you paid, those independent contractors, for whatever reason, they didn't pay their taxes. And so, sorry for you, but pay taxes, pay that payroll tax. And you can go after those independent contractors and ask them for that money back that you paid them. Good luck with that. I mean, that's really kind of the attitude. I'm being flippant, but I mean, that's what happens, which is the employer then becomes responsible again for collecting that payroll tax, regardless of whether you actually collected it from that employee. So that is the ultimate penalty. And then obviously they're going to have issue with the fact that you misclassified them. So there may be other penalties, possibly interest that is assessed, because basically the government didn't get their money. They should have gotten their money. So it's kind of as if and you were responsible for paying it. You didn't pay it. It's as if they gave you a low interest loan. So now you got to pay interest back to them for use of their money, which you never had in your possession. So it cascades into a lot of problems. And so the way to, and going back to the front end of that, which is, just make sure that if you ever have any thoughts about reclassifying your employees as independent contractors, certainly have a discussion with your attorney, with your CPA. Make sure that your independent contractor agreement is appropriate. Just because you call them an independent contractor on the title of the document doesn't make it so. A lot of people actually think that. And so, it isn't the way the world works. And it gets a little complex because there is a test under, for example, the North Carolina Department of Labor, the U.S. Department of Labor, which is not exactly aligned with completely the standards that the IRS uses to determine whether you're an independent contractor or an actual employee. And it does vary in some cases from state to state, because you're talking about the State Department of Labor in putting forth regulations based on statutes that are state specific. So it does get a little complex, and that's why you will hear me and others say that there are certain things that are really inherent and embedded in state law. Employment is one of those, and certainly real estate is another. So that's why when we fight over the jurisdiction of, or the applicable law to a contract, and it's North Carolina, part of that reason is because, especially in an employment agreement, that we know what North Carolina law is and what is going to apply. And so those are the things that go on behind the scenes, which is, okay, North Carolina law, dealing with, we can talk about non-competes, about, okay, what is the enforceability of a non-compete? And that is subject to state law. And a lot of it is not what you see in print as far as a statute or a regulation necessarily. It's what you see in case law. And it's going to be the courts that interpret, well, under this circumstance, this particular person was is subject to the non-compete because it's not overly broad. Well, let me take a step back. Okay, components of a valid non-compete restrictive covenant. You have to deal with geography. So how big is the bubble that they cannot compete in? You have to deal with time. How long? Is it 1 year, 2 year, 3 year? And then it has to be for a legitimate business purpose. And that deals with kind of the scope of the restriction. And is it that the person is restricted from doing anything related to any type of numbers, accounting, etc., or is it that there is very specific that they cannot do certain things, but they can go work for an accounting firm if they're doing business development, which has nothing to do with actually processing numbers on behalf of their clients. So again, went way off on a tangent about that, but it is to answer Joe's question about, okay, the penalties of misclassification of an independent contractor. And so I don't know, Rhett or Adam, if you want to add on to that, or maybe tell some more stories about how that can go really badly for business owners.
I'm so glad you brought it up too, Jack, just because I mean it was just yesterday I had a call from a client who said that they had this non-compete, and he was an independent contractor, which, as we know, independent contractors depending on the state can or cannot be held to a non-compete. Very state specific there and what the courts say, but also he had an old employer, or not even employer, an old business that he worked for as an independent contractor that was hunting him down and finding him in parking lots and telling him, no, you cannot do this anymore. You have a non-compete. We're going to have some choice words if you keep this up. And the first questions I asked, just like you said, I said, okay, well, what's the term for? How long have you been, not working with this person? He said a little bit more than a year. And we see most non-competes are held for a period of, up to 2 years or so after the employment is kind of the stretch of that arm. But also his non-compete said the language of, you know, anywhere which the business has or will, provide services in the market. And it's just so overly broad. We see time and time again that, 25-mile radius from where you're actually doing the work for the company is kind of the outer reaches of what the courts are going to actually uphold. So it's definitely important to make sure that if you do have non-competes with your employees, that they're not overly broad. Because I told him too, I said, well, is that all it says? And sometimes what we'll recommend to clients is, you can put in some language like that. Maybe they are a C-suite executive, and maybe they are traveling to every office in Dallas and in New York and in Charlotte, and they should be restricted from the competition there. But a lot of times a non-compete will just state that and shut off. And as we know, in the court system in North Carolina is judges will do what's known as blue penciling. Well, they'll start marking out provisions. And, if there isn't any smaller radius of geographical scope within that document, and you just scratch out, in all geographical regions where, the employee or, work to provide services, well, now there's no geographical scope. And so the non-compete is kind of null and void. But, we'll recommend to clients to have that, and then, put in there maybe a tighter radius of, let's say, specific cities, or a 15-mile radius from the center of these cities, X, Y, and Z. And then maybe we'll just put in even tighter radius of 25 miles from employees, home office or something. So as you go down the line, the judge can strike, and then eventually you still have an enforceable non-compete, even though it's not as geographically broad as you originally hoped when you signed it.
Yeah, and I'll add to that, and you said this, but just to reiterate, courts are not going to rewrite your contract. They are not going to remove 25 miles and insert 20. But if you stack them, and we do that a lot, which is, and this is exaggeration, but A, all of United States, B, all of the Southeast United States, C, all of North Carolina, South Carolina, Georgia, D, all of North Carolina, South Carolina, E, all of North Carolina, in Mecklenburg County, blah, blah, blah. In some cases, we've gone that crazy with that, but usually not. It's more, it starts tighter. So you start with North and South Carolina, maybe, kind of thing. So it's called blue penciling, is said, and they will strike out provisions, but they will not add things or change things. And then that is even if they use their discretion to do that, versus saying it's just because it has a little bit of language, even though the rest of it might be enforceable, they still can say it's out and not compete. And we've talked about previously the whole thought about the government saying, that there was a push for all non-competes are invalid, and you have to tell your client, your employees that it's invalid, and despite the money that you paid to them. That's a topic for another day. But there is a question about the possible elimination of certain federal agencies. And so, Adam, I don't know if you want to hit on that and the possibilities of that happening.
Yeah. So interesting question. It was around, hey, is the IRS going to go away? Could taxes happen at the state level instead? And, it's funny, stuff like this comes up, and then you go back to history. That was the system. It was called the Articles of Confederation, and it didn't work, which was states funding the federal government. So that's why we have the Constitution as it exists today, is because the earlier version didn't work. So I don't really see that happening. With respect to the IRS itself, the challenge when people bring this kind of stuff, or politicians bring this kind of stuff up, is that our current tax system is self-reported. and in fact, they got rid of the automatic calculation thing. We're one of the only countries that actually has a self-reported system. um, and in other places where they also have self-reported system, but with no enforcement, like Greece, you know, people aren't actually reporting. So if you look at the $80 billion, whatever it was appropriated to the IRS, it's caused all the ballyhoo. And look at how those funds have been utilized. Kind of bucket one was, hey, let's just increase the number of people answering the telephone so we can increase our customer service. Because if Brett, had a call or I had a call, we have a secret bat line, and a lot of times you couldn't even get through on the secret bat line. They would
They just
say
tell you to call
practitioner.
back the next day.
Yeah, which is ridiculous. And clients would yell at me saying, "What do you mean you haven't resolved this?" I'm like, "What am I supposed to do here?" So they did fix that piece. The second piece that they focused on was low level enforcement. And by low level enforcement, I'm talking like people that didn't even file the tax return that should have. I'm not talking about shenanigans. They haven't even gotten to shenanigans yet. These are just people that should have filed a tax return. They didn't. Hey, we'd like you to file your tax return, please. And the fruits of that effort was something like $1,000 collected per every dollar of payroll at the IRS. It was a fabulous return on investment, in terms of just getting people who were in clear violation of the law to become compliant. Category number 3 that they haven't really spent any money on yet was to upgrade the IRS systems. When they talk antiquated, I mean, like literally, if you mail your tax return in, it is getting hand keyed into a system. It's not good. And if you think about like, well, what else does the IRS do? You know, guess who issued your um, pandemic relief check? The IRS. You know, guess who issued the guess who sent you back the tax credit that was an incentive to buy the solar hot water heater or whatever? The IRS. Like, in other words, they do a lot in terms of administering. Hey, we want to get money to the citizens of the United States fast. They're the agency that actually does that, on the government's behalf. And I think, lastly, when it gets to the system of tax itself, you know, we also used to, there used to not be an income tax, and we were reliant upon tariffs and duties. And, whether you believe in that or not, the powers that be at the time thought, well, let's go to more of a free trade system, and only use tariffs and as a stick, when we feel like we're getting dumped on. But that shifted with the income tax constitutional amendment. I will say it again, with the income tax constitutional amendment, we switched the method of revenue collection. So like, that's not, I mean, you'd have to completely flip the method of revenue collection overall. I'm not talking like, I'm making this up, but I want to say like 90% of all government revenue is from the tax system. So how will we pay for the military, Jack, if you and I aren't paying our taxes? So it's one of those things. It's a fun exercise. Say, hey, yeah, we got to get rid of it. It's like, it's just not practical. Like, in other words, I don't see how it would ever be practical. So anyway, tirade done.
Yeah, well, I mean, it's so interweaved, and other examples would be our interstate system. So the interstate system was built using revenue justified by us as a nation needing to move military assets in between states and reposition them. And so airports, the city of Charlotte owns the airport, but there is a lot of federal money that comes to the city in order to operate that airport. So it's, I look at those things as assets of the nation, of the citizens, even though it is titled to the city of Charlotte, if you look at the property tax records, et cetera. So it's just to decouple all of that and put the responsibility. So then, for the interstate system, you drive here and you go, who's responsible for repairing I-40? in between Tennessee and North Carolina, and let's say that we do a better job repairing it and we repair it faster. And then it's just sitting there at the border waiting for Tennessee to get their act together so that cars can actually travel on I-40. So things like that. I think that we're so interwoven in the structure that I would say it's an impossibility for anything like that to happen. So all right, so we have a few minutes left, and so anything that I have really would take a few more minutes than that. So I'm going to reiterate something that I said previously, which is that this is also a good time to go back and look at your contracts and go from the back end moving forward, meaning look at the boilerplate and see what it says in there. So if it says that you had forgotten that there's an arbitration provision in there, and then you have a dispute and you're like, okay, I'm going to get my day in court because I'm the David and they're the Goliath. And then, well, nope, not happening. You're going to be stuck with arbitration. If it says things like, okay, well, that no, and most contracts will say nothing, this can't be amended except in a writing signed by both parties. But for the past 5 years, you've been doing something differently than what it says in the agreement. Now, there are the concepts, as we've talked about before, course of performance, course of dealing. Is that a modification? But the words of the contract say, unless it's in writing, then and signed, then it's not a valid modification to the contract, despite the party's behavior. So, and again, there's equitable doctrines that would countervail that. But go back and look at those contracts and make sure, especially if you're using a form contract, you don't have to go back necessarily and look at all your contracts that are signed, but focus on the forms that you're using moving forward and making sure that they're still relevant and accurate and pertinent to what your business is doing and how you're actually operating the business, how you intend on operating the business with respect to your customers and your suppliers. So on either direction. So I don't know if either of you have comments on boilerplate or contract structure or anything like that. All good? Okay.
It's fantastic. I
All
mean,
right.
we could talk for another 3 hours, Adam and Jack, and I don't know, maybe we'll have to do a part two to this and hit on things like personal guarantees of debt and protecting business relationships and whatnot.
Yeah, there's a long list and we only scratched the surface of it. And so we can certainly do that when it's our turn next to take on the legal aspects of things. But so yeah, and then I know you didn't ask for this, Adam, but I don't know if you want to share with what you got going on in the near future from an accounting perspective, as far as your own webinar, or is that not
Oh
what?
yeah, no, it's an interesting experiment for those people that are wondering about the use of social media. We're doing our first ever live stream um, on LinkedIn as an experiment. Well, I mean, it's good information, but as an experiment to see, hey, how does this live streaming stuff work? But we're going to talk about all the things that you can still do to impact your tax liability this year, even though by this year I mean for the 2024 tax year, because tax people always think in dog years. For the 2024 tax year, even though it is 2025. So this will be all sorts of good tips, tricks, shenanigans, um, all the stuff. That's next Thursday. I think at 1 o'clock after this.
Okay. And I will do the standard closing, which is that thank you all for joining, all of us. Thank you, Rat, for joining in. As I told him before, he said yes and gave him the opportunity to bag it, not show up today, that he will be asked and to join in future sessions. So this is, I'm sure, the first of many moving forward. Thank you to all of you again for joining. As you all know, this is being recorded and will be put on the BGW YouTube channel. And then Shoemaker has a YouTube channel that you can access through my bio. on our website and otherwise through YouTube. So we will see you next time, and we will publish the topic of conversation as we typically do on Tuesday or Wednesday of the next week prior to, and we'll roll from there. So everybody have a great rest of the week.
All right. Thanks, Jack.
Absolute
Thanks,
pleasure.
Rhett. See you guys.
Thank you.
Bye.
Bye.
All right. Bye.